Hello and welcome to another update video about AVAX. AVAX decided to take the direct route to the downside. Already in the last video we said, 1884 seems like the ideal target for a C wave to the downside. If we consider that we've had our A wave, then a long B wave rally, which, okay, it wasn't that strong, but it also lasted from the 13th of April to the 22nd of May. And that now a C wave to the downside is unfolding, which should turn into a 5-wave move. At the moment, we seem to be in the midst of a third wave in that C wave. I'm not labeling the micro. I find that unproductive. Doesn't make any sense because there are going to be too many changes when we talk about these altcoins. But the idea is we're heading down here in this C wave into our support area, which actually has been on the chart for many months now. And the alternative I discussed in the last video was possibly just a larger B wave. So the idea that we could see a larger B wave corrective rally deeper into resistance, because the 50% retracement level was never touched. I mean, a B wave doesn't need to touch it, but it still meant that, okay, we have at least have to consider we could get a larger B wave from here. But that would have meant a larger flat correction, A, B, C in wave B, and then to come down. But it would simply have delayed the sell-off. So that's what I mean, it's now taking the direct path. And it would have taken, it would have required or taken, a break above the trend line as initial confirmation. I mean, we're now heading into, let's say, an opportunity zone. Now, finally, the AVAX chart could be interesting. I don't like the structure of the move up. I've mentioned that before. But it's now getting interesting again from a, let's say, reward to risk point of view as we are getting closer to completing this correction. However, it's not complete yet. At least there is absolutely no evidence for it. The $24 level could be a next area of support. It's the 50% retracement if we measure the entire length of the rally, which is a potential 5-wave rally, and then take the Fibonacci levels. The $24 level is a possible support level. There could be a bounce, okay? There could be a bounce. We might test the trend line again from below. So something, for example, like this might happen, corrective rally and then continuation to the downside. So what I can do, I can just extend this trend line a bit. And I think it's important to realize that as long as we stay below the trend line, or we're simply following the trend, that's what this trend line is doing. It's guiding the price. What we can do as well is to, let me make that a little bit shorter, and then we copy it. And we have a parallel channel. What we can do with this channeling technique is to identify where maybe, but it's not so reliable, where maybe this C wave could end. So depends on when it's reached. I mean, maybe it will reach all the way down here, right? The entire support area, it ends at $13.40. Below that, things will get far less certain. I mean, there's never certainty in markets, but probabilities for a more bearish outcome will increase. At the moment, what we are dealing with is certainly a downtrend. We're in a local downtrend from the March highs, but the local downtrend is obviously still unfolding, but we are within a support area. So a bullish perspective could be taken, medium term, long term, as long as the price can find support in the you could say, in the opportunity zone, in the support zone. However, if we see a break below, let's say $13.39 or $13.40, that will reduce the likelihood. So we are in a local downtrend. We started that downtrend in March, but now we need to see if the market can react or the bulls can turn up at some of these key levels, which act as possible support levels. Now, there is no low until we see a first rally, like a first 5-wave move up, followed by a 3-wave pullback, or at least a first break above a resistance area. Like in this case, we have the trend line that we could be watching, but it takes a first rally, and then the market needs to prove that by holding a higher low. For example, what we want to see is eventually, okay, let's say it goes down a bit further. We want to see a first rally, break something, resistance as previous swing high, and then a higher low, and that will be the stress test. If it can hold a higher low, then we can continue to move up from there. At the moment, I didn't want to do that. At the moment, what we see here is simply a local downtrend. No sign this downtrend is finished. We are now quite deep in support, but there's still plenty of space. So at the moment, I assume we're going down a bit lower. Bear in mind at 24 we have the next support, and then 1880 would be ideal actually for this D wave. A break above the trend line would be an early indication that a reversal could happen. That's the update about AVAX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.